Hey, good evening traders and welcome back to the channel. Today we're going to look at silver and why? Because it is breaking out, my friends. And I don't mean a daily breakout or a weekly breakout. I mean a monthly breakout potentially is unfolding right in front of us. And it's going back all the way to 1979. So let's start off in the monthly time frame because what I've done is I've marked out some very, very key levels. Let me take off this volume profile real quick so you can see it better. Okay, so here we have it. We have the 1979 high, which was a wick high at about $48. Okay, then we had our 2011 high, which was also a wick high at $49.94. So it went higher, but it never confirmed, and that's the very, very important thing to take away here, right? We created this essentially cup pattern. And it never confirmed above. So what did it do? It rejected back in 2011. We had this massive sell off or sell down to establish these lows here, where over time we created this kind of wedge pattern, right? And then at the beginning of 2024, we started our move higher again on the monthly chart, and we're breaking out of this wedge here. So here we find ourselves today on the verge of confirming the breakout of the 1979 high. Now, why do I say that? Well, I'm going to walk you through it. Okay, so the breakout of the 1979 high, we had a candle close last month at looks like $48.62. Now it had a wick high. Now this is very, very important, guys. So this wick high, in order to confirm this 1979 monthly candle close high breakout, we need to close above this line. Okay, so let me draw this on and show you what I'm talking about. So last month's high, which was at this $54 and call it 39 cents. Now I'm going to switch now to the 24-hour chart because look what we're doing on the 24-hour chart. We are closing above that high right there. Okay. And if we confirm this with a candle close above this on the monthly chart, my friends, we have a breakout of the 1979 high. Now that's massive. That's massively huge. Let's go back to the monthly chart and see what we would need to do to confirm the 2011 high. So in order to do that, we would actually need a close next month higher than this candle high. So let's not get ahead of ourselves. First things first, closing and confirming the 1970 high breakout is massive. And here's why. If we go back to the monthly chart, this not only is a cup, which I referred to before, but it's a cup and handle pattern, which implies, again, if we break out of this and confirm, it implies a much higher price. So you're going to want to stick around all the way to the end because I'm going to give you that price. But now let's break it down on a weekly basis, and I'll explain to you where we're at now on the weekly. So we have basically we tried to attempt to break out here a few weeks ago, about 5-6 weeks ago. We came up, closed at it, then closed above it, but we never had a confirming candle above that. So what did we do? We sold back down in, and we created this kind of rounded bottom, which in other words is really just a bull flag that we're forming. And now again we're in the verge of confirming this breakout. So last week we had a close here. This week we're going to want to close above this candle. So we'll see where things close on the weekly chart, but this is set up to confirm, in my opinion. It would need a nasty rejection to not do that. So ladies and gentlemen, we are in the middle of witnessing history, literally dating back to 1979. This is massive. So now let's go to the daily chart. Actually go to the 24-hour chart and kind of want to show you where we're at here. So again, on this chart, we're creating a cup and handle pattern, right? With a potential breakout. Now we're going to want to see on Friday. Let's go back to the Friday. So on Friday we closed at, let's mark this off as well. So on Friday we closed right there at 56.37. Okay, so let's make that over. So on Monday, what we're going to want to see is we're going to want to see a candle close above that. If we have a candle close above that, then we will confirm the daily breakout of this cup and handle, which would imply that we would go to a price of, let's do that calculation real quick. That would give us a price target on that breakout of about $63.40, let's call it. Okay, so then we have, that's target, that's a potential target. The additional target that we can identify from that potential breakout is we're going to want to take this pivot low here, those lows there, and draw that up against that, and then we would have a target of about $59 and call it 35 cents. So we have take profit level 1 and we have take profit level 2. Those are both two very, very valid targets if you're looking at the daily candles and where can it go before we ultimately get that pullback. Because likely what's going to happen is, obviously it's not going to go straight up to my monthly targets and weekly targets. It's going to take, in my opinion, probably several months, maybe years to accomplish. We're going to go back to that in just a second. But this is kind of what I see unfolding here. If we get our close, we get our Monday close up somewhere in this range, I could see us doing something like this. Potentially, depending on how strong it is, we could even go up here and then do a retrace like this. If it's super strong and super bullish, we'll do something like this and then go higher. Alternate number 2 is we do something like this, hit the top of this parallel, and then reject, and then maybe go back, test that median line or to test the potential breakout, and then realize our prices that will take us up into the mid 60s to 70s, which could happen very, very quickly depending on this breakout. So first things first, we're definitely going to want to see a candle close on Monday above, let's go to the 24-hour chart. You're not going to be able to see that just yet. Futures aren't trading yet. But again, we're going to want to see a close above that, which will cement the breakly candle, the daily candle breakout. Then going back to the weekly candle breakout, we're going to want to see the move up into this range, as I mentioned earlier. And then the monthly is only if, we're close to it. I think, what's Monday? Let's see here. We are... Yeah, that would put us at a monthly close. So Monday is going to be very, very important. And yeah, this thing looks very, very strong and poised to do some incredible things to the upside. So let's now go back to the monthly chart, because I promised you a price target on this potential 1979 high breakout. And the way we would calculate that, my friends, is you take it from that high here, you draw it to the low of the range, which would be right there, and then you take that up on the breakout, which would put us at let's see here, from right there, I'll get it, it's not going to be exact to the penny, but it will be very close. That would give us a target, a potential target of $92.70 on the monthly. Now that's not going to go there right away. It could take several months to do that, but this potential breakout of this head and shoulders implies that we go and we see a $92 silver price, which, my friends, is insane. But I think we are on the verge of it. I'm going to do an update after the monthly close to bring back and explain exactly where we're at and where we can potentially pull back to. And if you miss this run, don't worry. We will get a pullback. We will get a retrace, and you will be able to take advantage of this. So you're going to want to check back with me next week. I'm going to do an updated video on the monthly close. But yeah, this looks super promising. I'm going to take this off and take that off so you can see it, and go back to that, and go back to the daily chart just so I can frame it in with better context on where we're going over the next couple of days. And my friends, there you have it. Some very, very interesting stuff on silver. So if you like today's analysis, hit that like button, subscribe to the channel if you're not already subscribed, and we'll see you guys on the next one. Take care.